Okay, starting with the new topic of current issues, and this topic is completely focused on technology and the credit market. That how the credit market is evolving with the help of this technology. Also, we will take into account the different risks as well as the challenges which the regulators are facing. Along with this, how they can encourage the growth means obviously there is a risk, but on the other hand they need to ensure that it will be having the huge amount of growth in the market. So we will start with some of the limitations. Then we will compare the different market segments which are available in the different countries, because sometimes it happens that the market segment, the market situation in US might differ in the market condition with the UK and might differ with the market condition of Japan, China. So we need to distinguish between the different market segment over the different countries and what are the factors which are driving the growth in the credit market. Next is that what are the benefits which we are expecting from the credit market means when it in attached with the technology. So it is providing the convenience, lower transaction cost, better assessments. Okay, means you can get the more flexibility towards the credit. If you'll compare the market of today and the market 10 years back, there was the huge difference when you are going to avail the credit. Now credit is at present now available in your phone. Okay, you just have to fill up a single form and the amount will be credited directly to your account, and earlier the process was very difficult. So the technology is really making the transaction smoother and smoother with the lowest amount of the possible cost involved. So, what is this fintech credit market actually is? This is nothing. When you'll see the word market, okay, what is the use of the market? The market is basically allow the buyer and seller to meet at a place. Means if I am the lender and you are the borrower, so I need someone who can take the money and you need someone who can give the money. So this is a market where you need the money and I need to give the money. So with the help of technology, I am creating such a credit market. So I call it as a fintech credit market. Okay, so this topic includes four different LOS. Now I will tell you what are those four LOS, starting with the difficulty in measuring the size of the credit market. Difficulty in measuring the size of the credit market. Second is about the factors which are driving the growth in this credit market. Now whenever I am saying credit market, taking into account the credit market which is associated with the technology fintech. Then what are the benefits and risk we are getting from the fintech credit market? And the last point is what regulators are doing, the kind of policies they are making, the steps they are taking in order to formulate a proper guidelines, proper rules and regulations to manage this fintech credit market. Okay, so starting with our first LOS, which is talking about the difficulties in measuring the size. So why it is difficult? First of all, it is very diverse and it continue to innovate different kinds of product in the different areas. Third important point, that it do not accept the demand deposit from the public, so they don't have to give the reports to the regulatory authorities, and because of which it is very difficult to obtain the data, to obtain the information from the fintech credit market. Okay, so if they are not disclosing their data to the regulators, then how we are getting the data? So we are getting the data from the surveys, from the company website, or if they are making any public reporting, any other some platforms, or there are some private sources from where we try to gather the data. But that data will not be considered to be the 100% foolproof, because we are trying to gather and manage the data, but it's not 100%. So this is the reason that it is difficult to measure the amount, the size of the fintech credit market. Clear? So first point is there is no requirement to report to the regulatory authority. Second, there are few of the institution, few of the companies which are also involved into the fintech credit market, but they are so small that their data will not be included, and because of which we can say that the total size is underestimated. Clear? So this is the end of our LOS-A. Now the LOS-2 is about the factors which are going to impact the growth. So the first factor which drives the growth of this fintech credit market is the economic growth of that country. Means if someone is going to give you the loan, then definitely he is going to check what's the situation of your economy. Clear? What is the economic growth of the country? How the financial markets are developing, and how's the regulatory quality is there, whether they are lenient, whether they are very strong enough with respect to this. Okay, so what are the depth of the capital market, what kinds of products available in the credit market. So based on this, they are going to see that my country is developing the huge amount of market for the credit market. Clear? Now suppose if there is a country in which only the few lenders are available, so the fintech credit market can enter into the market and provide the new alternatives of lending, as well as they can provide the loans at the lower possible cost, because their operational cost, their transaction cost are way lower as compared to our traditional lending system. And this influence the market maximum in China. China is having the maximum percentage of fintech credit market, and the more intensive my regulation will be, the more will be the growth in the market. But it completely depends on the way we look towards. Means if I want a lower quality of regulation so that I can enter into the market and can exploit the market, but it can impact me adversely as well. So it is we cannot say with full 100% confidence that how regulations are going to impact, but yes, the less intensive regulation, they may enhance the growth. So higher the GDP per capita leads to higher growth in the fintech credit market. Next important point is that based on some evidence, based on some studies, it have been seen that the jurisdiction which will be having the more stringent banking regulation will be going to discourage the fintech credit market activities. So when I'm saying the stringent, so it can include like barrier to entry. Might be a new company cannot enter into the market, they need to like follow lots of rules and regulation, lots of reserves requirement. If it's so, there are very few companies going to involve. Or it can also like you cannot launch the new product into the market, or might be the technology will not be uh, involved to the credit market. So if these are the situations, then we can say that there is a restriction on the growth. So China will be having the maximum share with respect to fintech credit market, and followed by United States and United Kingdom. So we are done with the two LOS. One is about the difficulty in measuring the size, and the second is about the factors driving the growth. Now third point is about the potential benefit and risk from the fintech credit market. Now if I will be starting with the benefits, so benefits I have already discussed, like there is a convenience, lower transaction cost, and we can have a better credit risk assessment with respect to our customers. Second, the access to the credit is very easy, because if you know that you need the money, and if you approach the bank, there are lots of issues you have to face, might be very time consuming, huge amount of transaction cost, and as well as you need to keep lots of mortgages. And if you are a very small scale businessman, okay, and you need the money, so it is very difficult to get the money from the bank. So these platforms are really good for those who are looking for the small amount of money in the form of credit. As well as it will improve the efficiency with when it compares with the commercial banking, the traditional commercial banking. And when it comes to the risk, okay, if we are giving the money to someone, what is the maximum risk we can have? We can have the default risk. So it was very huge in the fintech credit market. Along with that, when it includes the technology, there are cyber risk, there are few events of frauds. Okay, sometimes it happens that the platform collapse, might be the servers are not available. So there are default as well as the issues with respect to the technology. Now coming to our last LOS, where we will see that how the regulators are formulating their policy, and what their main point is, they should design the policy in such a way that they can balance between the benefit and risk of the fintech credit market. Now the first important point is that this is the same thing which the normal banking system are doing, but there is a one small difference. The difference is related to the regulatory requirements with respect to the deposits, but the fintech credit market is not taking into account the deposits. So the rules can be traditional, which the rules are there for the banking system when they are going to lend the money to some customers. The rules for the lending are going to remain the same, and they need to ensure that they will give the neutrality in both the traditional banking business as well as the fintech credit market, because if anyone will have the competitive advantage, will gain the more business. Okay, so they want that both will have the parity in between, they both will have the neutrality. Apart from this, the regulators have provided the benefits, the incentives if someone is entering into the fintech credit market, by giving them the regulatory sandbox. And what is this sandbox? They are meant to test the new technology. If you are coming up with the new technology, you can test your new technology via regulatory sandbox. There are innovation hubs. So these hubs are basically to provide the support to those new entrants, those who want to enter into the market. But at the end, if I want to conclude, then the last statement should be that in order to monitor this fintech credit industry is going to be become very challenging. Why? Because it is growing very rapidly, and there are lots of huge innovative changes, new products are coming up on a regular basis, which make it is difficult to monitor. Clear? So I end this reading here. Thank you.